Hey everybody, Thursday evening. Welcome back to the Financial Thing live stream. Today we have a special guest, as sometimes we do on the stream. We have Peter Reed from Assets Exchange, who some of you have been emailing me about Assets Exchange because you are Assets Capital investors and you want to know what the deal is with this secondary company. How are they connected? What do they do? So I reached out to Peter. I had a conversation with him a few weeks ago, which I was very interested in what they were doing. So I thought, what better way to have him come on the stream and sort of chat about Assets Exchange and about peer-to-peer lending in general. So we're going to do that in just a minute. Don't forget to please hit that thumbs up button or thumbs down if you don't like the stream. I don't mind. Just anything to get the YouTube algorithm fired up. And subscribe to the channel. Every week I am here bringing you the up-to-date news on peer-to-peer lending. Also, we do stock chat and some cryptocurrency, which we'll do at the end of the stream. When we're done with Peter, we'll kind of go through the Bitcoin and crypto marketplace, see what's going on there, see what kind of news is out there. We get a lot of news this week, which I consider to be sort of fake news, designed to fill your hearts with fear. So we're going to have a chat about that. But let's get right to it. By the way, if you have comments or questions for Peter about Assets Exchange, maybe it's something you want to invest in. Full transparency, at the moment, I do not invest through Assets Exchange, but always here to find information out. But if you have questions or comments, put them in the chat, and I will go ahead and ask Peter and grill him, and he can answer everything. So let's go ahead and bring Mr. Peter Reed up here. Here we go. There he is, the man himself, Peter Reed, with a brand new haircut, which I'm most excited about. And now, when I first chatted with Peter, I think his hair was down to his shoulders, and he looked like a Cornwall surfer. So he said, well, if I come on the stream, I'm going to have to cut my hair. It'll give me a good excuse to do that. So here he is, fresh new haircut and a shirt. Welcome to the stream, Peter. Thanks for joining us. Appreciate your time.
Thank you very much. Thanks, Lawrence, and thanks for having me on the Financial Thing.
Absolutely. Sometimes I find companies that are intriguing who I want to sort of, we're having a problem right now in the peer-to-peer world. Is we're trying to find, I air quote, safe companies to invest money and try to get some yield. So when I find interesting projects, these are the people that I want to bring on and have talks with and get to know you and what you do. So hopefully we're going to do that today. Let me just pull up my notes here. By the way, where are you, Peter? For everybody that doesn't know, where are you located?
At the moment, I'm in West Surrey, just south of Guildford, in the south of England.
It sounds like somewhere where there would be a lot of cricket and polo played.
Yes, I think people in the UK generally look down on Surrey as being twee and la-di-da. It is both of those things.
I haven't heard that word in a long time, twee. That's pretty funny. So tell me about Assets Exchange. Obviously, you have a name that is very close to Assets Capital. When did you launch Assets Exchange? What was the year that this project was launched?
We launched in January 2019, but it had a very long gestation period before that. So we put our application into the FCA to become a peer-to-peer operator in January 2015. So it took 4 years to get our permissions from the FCA to be able to launch, and we did that in January 2019.
And so when was the first investment put up on the platform for people to invest in?
So the first investment was, I think it was actually January or February 2019, and it was a student accommodation in Kirkstall in Leeds, which is still on the platform.
And did that take a long time to fill back then when you were still sort of trying to get your feet underneath you?
Um, yes, it did. I think it's fair to say, and I'm sure some of your listeners will agree with me, but it was a steep learning curve when we launched in 2019. We were probably, if I'm honest, a bit underprepared, and it was a steep learning curve. So one of the things we realized very early on is that we needed underwriters to be able to fill in and purchase the properties quickly, and we still use a mechanism of underwriters to purchase the properties on the platform.
Okay. So let's talk about, we're going to kind of get into Assets Exchange and what it is you offer to potential investors. But I'm always very, very cautious. We've had this conversation. I'm very transparent about that. I want to know about the people who are running these companies now, because we've seen some of these companies fail due to the integrity of some of the directors and what they're doing. So tell me about you, and what was your experience before you started this Assets Exchange company? And then we're going to talk about sort of how you're linked to Assets Capital and Stewart Law over there. So what was your
Sure.
prior experience?
Sure. So I spent 15 years as an equity analyst. So my job was to write reports and try and predict the forecast income of companies on the London Stock Exchange. And it was, it was fantastic as a learning experience, because I effectively had a ringside view on which companies performed and which companies didn't perform, and what kind of financial structures should be in place to try and deliver the best return for investors. So that was absolutely fantastic, and that was up until about 2014, 2015. At that point in time, I quit being an analyst and I went to go and join my brother to go and create a software company for financial services, and we did that for a bit, and that's where really the idea of Assets Exchange came from. What actually happened originally is that we were approached by an Australian VC that specialised in owning high-end property, and they wanted this marketing tool whereby they could put some of the property they had into these mini markets, and then they could say to investors in Australia, you too can own your mini slice of, this is extremely expensive house on Bondi Beach, whatever it was. So we built them that piece of software and created this micro exchange for each of these properties. And then we duly never heard from him ever again. So our assumption is that he ran off with the software, but it did give us a very good idea, and we were quite intrigued by it. My brother and I had a bit of experience in owning buy-to-let property, and there was a lot of frustration about the process, even though we liked it as an asset class. And so we took this idea to Stewart, and we put together a financial model. He was quite interested. He obviously had the experience of the peer-to-peer side. He also had another business called Assets Property, which had a lot of experience in buy-to-let property. So that was really the genesis of the idea. Assets Capital would produce the regulation and support. Assets Property would provide the property, and we would do the financial tech and the regulation. So we put an application to the FCA around 2015, January 2015, and it took a long time. Because the FCA thought we were trying to have our cake and eat it, and also it was at the time when the FCA were taking over all of the regulation of the peer-to-peer firms over from the Office of Fair Trading.
So talk to me too about, Peter, obviously you have this experience within the software side, and then with the analyst side within the financial markets. What about the other people that you work with in Assets Exchange? Who are the main people behind that side of? Obviously, we know Stewart Law, but is he directly involved with the operations side of Assets Exchange, or is there other people that you can tell me about and what they do?
Yeah, so the board of directors consists of four of us. There's Stewart, who's the chairman. There's Jan, who comes from Assets Property, and myself and my brother. But the day-to-day running of it is myself, and I mainly take care of sales and customer relationship management. And then we have Ben Gent, who joined me at the beginning of 2020. And he looks after the operations, the finance, and the IT side of things. And then we have James Tedrick, who's in charge of property sourcing, and Kate Kellier, who's in charge of marketing, and George Atkins, who is in charge of compliance, legals, and tax. So that's the management team. That's the day-to-day management team. And all of them have got a lot of experience in the peer-to-peer space and financial services in general.
Okay. And so tell me about when you first approached Stuart. Did you guys have a relationship with Stuart Law over at Assets Capital, or was this kind of a cold call to him that you made? How did that go?
No, so we realised that we needed help on the regulation and the property side of things. So we actually knew someone at AltFi Data, and the introduction was made via AltFi Data. So this fellow Rupert Taylor at AltFi Data sent an email to Stuart saying, these people have got an interesting idea, are you interested? And we had a call, and yeah, Stuart got it straight away, and he was very interested in it.
Okay,
So
he jumped right on board.
Yes, but it did take 4 years to set the business up, so we got to know each other pretty well by the time it launched.
Okay, so Peter, let's talk honestly. Now, I've been a guy who has invested in some of these peer-to-peer share companies through property ownership, and so far I think I am 0 for 3 in my success with some of those the companies that I have invested through. So I have a bit of a sour taste in my mouth, but I know what you do is different to what those companies are doing. So tell me about what exactly Assets Exchange offers versus some of those other companies that have not really performed well in that space of property ownership through buying shares through SPVs and things like that. What do you do differently?
Well, several things. Just starting off on a boring technical note, we are regulated as a peer-to-peer operator. So the structure is different, and we are viewed differently by the FCA. So if you were to take another competitor, or a peer, like Property Partner, they operate under the AIFMD regulation. So when they set up a limited company, they will issue share capital in that limited company, and the proceeds of that share capital are then used to go and purchase a property. So what we do is slightly different. We also set up a limited company, just as they do, but the investors on Assets Exchange lend money to that limited company, and then they use the proceeds of the loan to go and purchase that property. So the bit that is slightly different from other peer-to-peer operators that we have is that the FCA agreed that there could be a degree of capital growth. So if the properties go up in value, then so would the principal of the loan. So we're effectively delivering the same returns that, say, Property Partner does in the same way. But we have the advantage that in certain circumstances, not all circumstances, the rent is viewed by HMRC as interest. So that is can be passed straight back to the investor, and before corporation tax is paid. So generally we can get the yields higher. The second aspect of that is that it does qualify for the IFISA, if that is what people want and they want to invest in properties through that. So those are the big advantages that we have, that I see. So in terms of the legal structure, so the second big difference, and this is the major one, is that when we started out in 2019, we thought that we would be buying regular buy-to-lets that our sister company Assets Property sells and specialises in. These were typically based in the north of England. They had gross yields of around 6-7%. Then after you take all the costs out, they come down to about 3-3.5%. And the value of the property would be between £100,000 and £150,000. So we started off on that basis, and we quickly realised that that was a tough gig in terms of managing all those properties, etc. By chance, we were offered a show home with Avant, who are a large developer in the north of England, and the terms of it would we would buy the show home and we would lease it under a corporate lease back to Avant. And it was a eureka moment. It was like turning the lights on, because this was a corporate lease. It was a full repair and insuring lease. We didn't have to do anything. They were a very, very credible counterparty, and they paid like clockwork. So it was like, well, this is the way forward. This is what we need to do. So we then, in early 2020, we bought 10 more Avant show homes. And they performed very well. They performed well throughout the whole of COVID. And we were working out ways in which we could go and get further residential property and then get them tenanted by these large counterparties under these leases where they largely looked after the property. So we were offered through various property agents properties that were used, some for charities and like children's homes and things like that. But the problem that we had is that we were always having to pay a premium on the bricks and mortar value of the property because they came with this fantastic tenant with a lease. So we made a decision in mid 2020, and James really sort of led the charge here to go and forge our own relationships with charities, and we've been doing that ever since, and it's an ongoing process. So now what will happen is a charity such as NACRO, which is a social justice charity, will say, we are looking for a property in this particular area, can you go and find one? We go and find the property, they agree to it, it goes through its checks and balances, they sign an agreement to lease, so that they agree to lease it once we purchase it and do the remedial work. And then once we do that, they tenant it, and they tenant it for a long period of time. So what we're trying to do is trying to get those bricks and mortar value of the property and just pay for that, and then we get the lease put on top. And then we can get this long, steady income stream with very little effort from our point of view. So that is the reason I think we're slightly different to other operators that you've not had such a great experience with, Lawrence.
Just to put it mildly, yes, that would be the case. What I found really interesting about Assets Exchange and the property, because we all know one of the biggest headaches of any buy-to-lets is management and managing the rental side of things. From what I understand, you don't have any part of managing anything because the charities that you're providing the housing to takes care of all of that. Can you explain how that works and how that takes the management side out of your hands?
Yeah, so under the terms of the lease, they are obliged to undertake the general maintenance and repairs of the property. And they are also obliged to use the property for whatever purpose they need, i.e. find tenants for it. So you don't get any void periods in the property, and I think if the roof fell in, then that would be covered by buildings insurance, and we would have to get involved, there's no doubt about it. But for general day-to-day repairs and maintenance, the obligation is on the charity to look after the property. And as a result, they just pay, and then we have very little to do with it.
So you're more on then a commercial lease rather than a residential agreement with these charities, right? So full repair type leases
Yes,
would be held on a
exactly.
commercial property, and
Yeah,
that really
exactly
puts
that.
you in a good position as far as your day-to-day operations are not consumed by dealing with tenants and dealing with hot water heaters that break. So you're completely hands off that side of things. Is that correct?
That is absolutely correct. So not all of the properties on the platform have these commercial leases in place. We have 3 or 4 under ASTs, and no prizes for guessing where all our time and effort is consumed. It's on the 4, not the remaining 16 under the commercial leases.
So is your goal in future to really target the commercial lease investments versus the ASTs, or a lot of these companies that are offering these property deals now are trying to get into the occupancy ones where they're putting a house into splitting it into bedrooms and renting it out per room to increase yields, which I'm not a big fan of. I think those properties, from my experience, have had a lot of headaches, even though I know they can yield well. But is that what you're trying to focus now on, is those commercial leases?
Yeah, I think
Investments?
it's very much driven by the requirements of the care provider or the charity. So, in the case of NACRO, which is a social justice charity, then they did need a couple of HMOs, but again, it's down to them to go and manage those HMOs. And we would put the planning applications in place to go and get them agreed by the local council for that. In the case of United Response, which is another charity that occupies a property in Devon we have, which is for two autistic ladies and their living carer, it's not an HMO at all. It is very much about the long-term care provided to these two ladies that need it.
And
So
yeah, go ahead.
it is trying to get accommodation that's right for vulnerable people in society. That's what it's there for.
And two, I like the social aspect too, that you're actually providing something that's beneficial to, the local community of where that house is located, and maybe to people that really do need help. And I think that's something that's really needed within the financial services sector, because it's also money based, right? Everything, and it's very dry. And you know that because you've worked in the finance side of things, in the equity and the analyst side, where everything is just money, money, money. But yet you wonder what good is being done. So I like the fact that you're kind of sprinkling some of this social positivity in what you're doing.
Yeah. I think everything's a balance. I think it's difficult to go and find financing for a property unless we do get a yield that's attractive to people. But I think it's definitely an added benefit if we can go and make sure that people's money has been put towards a worthwhile cause. Absolutely. No, I agree with that.
Yeah.
And I think it's just worth mentioning at that point that the more that James does digging in this area, the more you realise that there's work to do. So I think a lot of people are put into residential care that shouldn't be in residential care. That's not only extremely expensive for the taxpayer, but it's often not right for the person themselves. They want their own space. And I think the government's committed to that. But also, I think this is an area that's been left to a very few institutions that have been able to dictate quite unreasonable terms. And that's something that we can really add value, because each property is a standalone proposition on Assets Exchange. Mm-hmm. And as a result, we can have a direct dialogue with investors who are often willing to be a lot more flexible than these large institutions who sadly get the reputation they deserve from what we're finding out.
Yeah, absolutely. And once again, if you just joined us, this is Peter Reed. He is one of the founders of Assets Exchange, who we're having a chat, kind of finding out what his business does and why you might be interested in looking at it, is to build up your investment portfolio. Again, if you can hit that thumbs up. If you have questions or comments, put them in the chat and we'll get to them at the end. We'll do a Q&A and get to your questions. So Peter, let's talk about the size currently of the property portfolio. I know you're in that growing stage. You're in the difficult stage, right, where you've got to build the trust, and you've got to handle the demand and the supply of money coming in from investors and not taking on too much. So what is the current size of the property portfolio on Assets Exchange at the moment?
So the current size is 6.2 million. Mm-hmm. So small by most peer-to-peer operators and many standards, but growing. And it's worth adding that the loan value of those is now worth 6.5. So you've seen about 4.5% capital growth on the value of those loans that have been issued. So it is small, as you say, but we are growing, and it is a constant juggle in trying to manage supply of property and demand for property. And at the beginning of the year, we were doing our best to try and attract new investors, but now we're doing our best to try and get more properties on the platform. So, and it will always be that kind of seesaw effect, which I believe that Assets Capital and other peer-to-peer operators have had to juggle in their early stages as well.
Yeah, absolutely. And so talk about the sourcing of properties, because you've got sort of a very niche product, to where you have to find exactly, let's say a charity wants a particular type of housing, you have to go out and source it, make sure you don't pay too much, make sure it's good for Assets Exchange as well as for the charity. So how do you find the properties that you offer to investors and to the charities?
So it comes from a mixture of sources. Some of it is just straightforward searching of Rightmove and various other property platforms, and so you buy them on the open market. So at least you know that you're paying the fair value of it. We've also used partnerships with our sister company, Assets Property, and then various other property agents as well, who will provide and suggest ideas to us. But it is a long process. It's not as simple as buying an AST, like if you were a normal buy-to-let investor, regular buy-to-let investor. For example, in the NACRO BAS contracts, you need permissions from the local authority, you need permissions from the local police, you need, obviously, NACRO need to go and view it, and you have to meet the decent living standards of the government, and then you've got the vendor to deal with. So all of those things have to be ticked off, and I mean, particularly with the hot property market that we have right now, we are seeing that it's taking anything between 3 and 5 months to get one of these properties in place, ready for investors. So it is niche, but there are quite high barriers to entry as well.
Okay.
On it.
Talk to me about security as far as, protecting investors. Obviously, there's some dark horses in the peer-to-peer world of what we've seen. Companies going to administration. A lot of people are afraid. They just don't even want to take the risk anymore. We have to look at that because it's just the reality of what's going on. So how do you protect investors of Assets Exchange, and how are their investments secured by Assets Exchange?
So I think we obviously it's not lending to a third party, I suppose, in the traditional sense of it. So if you're a normal peer-to-peer firm, you are lending to a business that you have no direct control over. Whereas on Assets Exchange, you are setting up a limited company that you very much control. So the structure of it, of the legal structure, is such that although the investors are lending to the borrower, this limited company that buys the property, the limited company is very much controlled by the creditors, by the investors. That's done through the Articles of Association, which are very onerous. We've also just very recently tweaked the terms of business, so we will be putting a charge on all properties on behalf of investors, so they will have that direct charge over the property.
Mm-hmm.
So
yeah, that's how they're protected, by being having the charge on the. Do you do it through an SPV, or how do you set that up?
So what's happened is there will be this company called Assets Exchange Ownership Company, which is a company limited by guarantee. And as an investor on Assets Exchange, you will become a member of that. And then that property, that limited company that's limited by guarantee, will hold a charge on the properties in the SPVs on behalf of the members of the company that's limited by guarantee. So that is the charge. The property is in their name, but also the Articles of Association of the SPV require, and we are required by our permissions by the FCA, to make sure that all decisions are made by the investors. So if there is a break clause in the lease, a vote will go out to investors saying, do you want to continue with the lease? And it's up to them to go and do that. So investors very much control these properties. These are not arm's length in any way whatsoever.
Have you had any issues with the charities that you provided housing to that you can tell me about, or has everything really been smooth sailing?
It's been smooth so far.
Mm-hmm.
It's all been absolutely, I mean, touch wood. Everything's been fine. These are very large organisations. So I think United Response have £100 million worth of contracts with the government, and NACRO, I think from memory, they have about £10 million on their balance sheet, and they have large portfolios of properties. So it's quite a slick machine at their end. I think the battle that we have is trying to make ourselves known and build relationships with other care providers, because they already have their relationships there. And although we can be more competitive and we can offer a much better deal to them that's beneficial for anybody, it's still trying to win their trust so that we can bring more properties from different providers onto the platform.
So, what has been the biggest challenge for you as starting this company and gaining? Is it the trust side of things, getting the investor trust and getting the care providers trust? What's been the biggest challenge?
There have been a lot of challenges, and I'm sure some of your listeners who were with us at the very beginning will be of the opinion that we probably didn't start off on quite the right footing and we were underprepared. So the challenge really was in getting the system and processes right, which Ben has done largely throughout 2020, and being able to get the systems right and then have a good relationship and get back to people and try and win the trust of investors on the platform. And we've been putting a lot of effort into that. It was also trying to learn very quickly that having properties that were tenanted through ASTs didn't work, and moving on to this commercial lease. And then the challenge now, I think, is trying to develop these relationships with these charities so that we can bring more on and have a good pipeline. But also, the current challenge is trying to find properties at the right price. It is a very hot market out there at the moment, and it seems to be taking time. There's no point in overpaying. I think you said to me when we first talked, Lawrence, you said you make your money in property when you buy it, not when you sell it. And we really are, well, James is doing his best to try and find properties at the right price, which is a challenge at the moment.
That is important. So I have to ask you, and I don't think this was on my notes to you, but so this may come a little bit off the notes, but we talk about all the time on this stream about profitability of companies and how some of the companies have not been able to turn a profit. Talk to me a little bit about the financial side of Assets Exchange. How are you funded, and what's the sort of target outlook for being able to break even or become profitable? I know you said to me you run a pretty lean operation there. You've always wanted to keep the costs down on the operational side of things. So just maybe tell us a little bit about that.
Yes, I think. Well, I think you also said to me when we first spoke, Lawrence, is that these new markets go in 5-year cycles, and there's euphoria at the beginning. Everybody's setting up a peer-to-peer operation. They get the attention of the VCs. They throw a huge amount of money at them, and quite often they come under a lot of pressure to go and grow very, very quickly. And in doing so, you have to throw an awful lot of money at marketing sometimes. And also, I think you have to live with the decisions that you make. So if you start quickly, you might not have your purchasing process properly tied down, in which case you might buy properties that are unsuitable. Well, you have to live with that for the next 5 years. So you've got to be very careful, I think, in growing very quickly. So anyway, we do have a very low cost base. And to put that in perspective, Assets Exchange, we make our money in 2 ways. The first is through a loan arrangement fee when the property is initially financed. That's usually around 3 to 4%, so slightly more than a estate agency fee. And we charge that to go for putting the loan together, etc. And then we retain a proportion of the rent, usually between 10 and 15% on these commercial leases that we have for the charities. And to break even, we need to introduce about £700,000 worth of new property onto the platform each month. So we're talking about 2 to 3 properties, or 2 larger properties, and that means that we would be able to break even. So the long-term goal in terms of trying to become profitable is for our loan monitoring fee, the money that we charge on the rent each month, is to cover our costs, day-to-day costs, and we would need a portfolio of about £35 million to be able to do that. So we've got some way to go on that front.
Mm-hmm. So, go ahead.
Yeah, but we're well capitalised. We did a fundraising in October, and quite a few of our investors on Assets Exchange supported us on that fundraising, so we're very grateful for that. And at the moment, there are no problems in terms of getting anywhere near our tier capital or anything like that.
And so, most of your investors, are they private? Just family, private type of investors, or have you done anything on seeders?
We raised money on the seeders, yes, absolutely. Okay. So we did it through seeders because Assets Capital have done it time and time again through seeders, and we piggybacked on their experience on that one. All of our investors are private people, are high net worth individuals or smaller investors via the seeders platform.
Hopefully your mother gave you some money. That's what I hear a lot of. They're like, yeah, Mum gave me £500 to get the company started. So
yes, it was my old man who actually put the £500 in, but yeah.
You got to get it back to him. And let's talk about sort of the current state of where peer-to-peer lending is. I mean, if you started this operation back in 2015, you've seen this progression of where the business was back then, the euphoric nature of the peer-to-peer lending world, to where we are now in 2021 after we've been through the pandemic and we've been through some of these companies that have failed. What is your outlook for the future of peer-to-peer lending? With this contraction, do you think the industry is going to continue to contract, whereas the good ones make it through and the bad ones just end up dropping off the cliff? Or do you think there's going to be new companies that come into the space and peer-to-peer in general is going to continue to maybe grow and thrive? What's your outlook?
I think if you're applying to the FCA for a peer-to-peer license now, you've got your work cut out. So I think the FCA will be a big break on the number of new entrants that happen in this space. But I think every business only exists to become profitable and ultimately pay a dividend. And I think you have to have a financial model that provides for your investors, provides for your borrowers, and provides for your shareholders. And I think it is tough to do that because peer-to-peer is inevitably a very low margin game. Mm-hmm. It's not like other financial products. So you need a product that you can make efficient very quickly. I think you need to heavily invest in automation. You need to try and keep your head count very low. And I think you need to grow carefully so you don't invest huge amounts of money in marketing, because that can be very easily wasted. But I think peer-to-peer has definitely a place in the financial ecosystem. I think it does provide people with great monthly income in a way that is very difficult to find through other funds that are out there at the moment. And I think it allows people to feel directly that they are participating as well. Mm-hmm. So I think there will definitely be a life for peer-to-peer, but I don't think there are going to be hundreds of operators. I think there'll just be a few that will have to do the basics very, very well.
That's what we want to see. We want to see the good ones out there continuing to grow, push their products forward, and give people a chance to get some yield, and the bad ones who are operating not the way they should be sort of disappear out of the market and hopefully not take too much investors' money with them when they go. That would be what I would hope for the market, and I continue to keep an eye on things. So I have to ask you, I got to put you on the spot, because since you came from the equity analyst side of things, of course, this is not financial advice. This is just purely an opinion. What do you think's going on with the stock market right now, Peter? Do you still keep an eye on those things since you came from that sector? Do you still invest in that side of things? Does all your money go into assets exchange now? What's going on?
Um, I keep an eye on it because I find it entertaining above everything else, apart from anything else. I came from the small cap side of things, so I wasn't involved in the larger companies. So the small cap are always definitely quite entertaining, and there's lots of good ideas, and people get quite excited behind them. It has to be said that the biggest trend that I've seen is the move away from UK equities towards US equities and Chinese equities increasingly as well. So the connection becomes less and less per se. And if you ask me, where do you have your pension? I have invested almost 90% in US equities right now, and I think US companies continue to do amazing things, and you know they produce products that people want to use and are happy to pay for. Mm-hmm. That said, my ex-colleagues in the city are very busy right now, and there seems to be a lot of appetite for risk capital, so that's great, particularly after the pandemic. And it is all towards new technologies, etc. But I think it's a very tricky one. You need, I ended up, when I started investing directly in the stock market, I was a momentum investor. So I used to, the trend is your friend. So I would be buying into Boohoo, for example, or Burford Capital all the way up. Just because it was expensive, I would carry on investing in it. And that was good. It delivered some good returns. But I have put most of my money recently in the peer-to-peer space just because I like the regular income and the solidity of it. Or the perceived solidity of it.
So do you invest in other peer-to-peer company loans, or do you go into, like, do you invest through Assets Capital yourself, or do you just, everything for you goes into Assets Exchange?
I have an Assets Capital account, but the majority of it, if I'm honest, is in Assets Exchange.
I would be very surprised if you said anything different. Every time I ask that question to people who run peer-to-peer companies, they do it for spying purposes only. They sort of go and get an account, see what's going on with that.
Exactly. I have accounts with Property Partner as well, and others. But you're right, it's mainly for information purposes.
Yeah. And so, Peter, what I love about what you said about equities, and I've been sort of saying this for the last, I don't know, 4 or 5 years on Financial Thing, how investing in UK companies has sort of become a bit of a dinosaur, of where, you know, you would go to a financial advisor and they would say, yeah, let me get you a portfolio of BP and British Telecom and Rolls-Royce, and we got these great British companies, yet the FTSE has just underperformed for so long. And I've always said, you know, the US equity market and now possibly Asia, there's some places where you could probably pick up some deals. But I like the fact that you echoed my sentiment, because now I feel like I won in that respect a little pat on the back. Even I hope it remains to be true. I think nothing is always as it was, but I like the way you said that. So
there's some very good British businesses out there.
Let's not go there. I mean, no, I'm just kidding. No, I agree. There's some good British. I've been dabbling a little bit in oil stocks recently. I think it's a good cyclical place to be right now, personally, and I for the first time, I picked up a couple of UK companies within my portfolio, which I thought I would never do. No, I would never invest in UK companies. So, let's do a little Q&A. Some questions here from people that are watching who have. Let's see what's going on here. Robert Pate says, is what you do like buying a property yourself and then renting it to a local authority who also take care of everything?
The answer is yes, quite simply, it is. So the slight difference is that if it's just used for regular social housing, then it has to be within market rates. So because some of the people who are occupying the houses that we have require additional things, you know, bathrooms adapted to wheelchair use, etc., the rents can be higher. Mm-hmm. So that's the key difference in that regard. But yes, it is a bit like that.
Okay. Um, let's see. Mark Mason has asked, which entity manages and controls these companies that hold the loans? Not sure I understand that question because you don't really do anything to do with loans, right?
Well, the limited companies that are set up to purchase the properties are they're controlled directly by the investors, but they're owned by this assets exchange ownership company.
Yeah.
If that answers the question.
Yeah, there's no loans because all of the properties are just funded by. It's not like Property Partner where they're taking out mortgages on the properties. You're 100% cash that's been invested by
Yes.
investors. Okay.
Yes, but I mean the contracts through which the investors invest in these limited companies are Article 36H loans because it's a peer-to-peer operator.
I see.
But there is no mortgage taken out. There is no gearing, and that in itself caused quite a few issues over COVID.
Okay, I gotcha. Yes. Yeah, that was one of the things I was always wrote about Property Partner about the loans that could be problematic in the future. So I'm happy to hear that you don't do that in the same way. So I think that's important. Let's see. Chris Hayes says, what pipeline of new properties are coming through, both in terms of numbers and leaseholders? So what does your pipeline look like upcoming?
The pipeline never really sort of like gets concrete until the very last minute because James is always negotiating. So we have 3 properties that we're hoping to for NACRA that we're hoping to bring on in June, and then we got 1 lined up in July. So that's 4. And then what we're trying to do is we're trying to work with these registered providers who they would be the tenants, and what you do is if someone needs care, i.e. day-to-day care, then you have a care provider who would be the person who goes into the house and helps that person, and then you have the registered provider who's the person on the tenants on the other side of the agreement. And so what we're trying to do is we're trying to organise one with a registered provider, quite large ones such as Inclusion Homes or Inclusion Housing, and we're trying to bring one of those on shortly. We've been in discussions for quite a long time now, but we reckon we're fairly close.
Okay. Somebody just mentioned that Lloyds Bank has been a top performer in my portfolio, so I have to, because I say I never invest in UK companies, but I did buy some Lloyds Bank shares back when it was 25p. Yes, you are right, Mike Powell. Thank you for pointing that out. Let's see what else we have here. Paul Bagworth has asked, what happens when the property is fully funded? So the process is you put it up on the platform. How does that work? Do you already have the property under agreement before it gets funded, and then it gets up onto the platform and then funded that way? How does that work?
So we fund the properties initially through the Premium Investor Club. So anybody who has £25,000 in Assets Exchange is a premium investor. And when we find a property that we think should be on the platform, we would put all the details up and we'll send an email out to the premium investor community, and they will be invited to pledge some money to go and fund it. And it's usually required 2 or 3 days before the actual funding and completion is required. And so they will do that. We do pay an underwriter fee for that, but the underwriters are all obligated to sell some of their holdings onto the exchange at the price they paid for it. So nobody's being ripped off at all.
And have you had situations where there's too much investor demand for the houses? Is there some kind of priority? How do you prioritize who gets to invest in the properties and who doesn't?
Recently, we've had to put in a mechanism that limits the amount that underwriters premium investors can pledge for. So we just cap it. So they say, for example, £5,000 per person.
So you want to give everybody a chance to get in.
Exactly.
That's important. Yeah. I think that's a good thing to do. And then Paul also asked, is there a way for you to sell your ownership Well, he said, can you sell your loans easily? So I'm presuming Paul is asking,
Yeah.
is there a way for you to sell on a secondary market if you need to exit for some reason as an investor?
Yes, so each property has an exchange, and you can buy and sell on that exchange. There's no commission charges for it. So you can buy and then you can sell, and it's up to you to put the price that you want to sell at and that you want to buy at. And as long as there's a corresponding buyer, then you will be bought out of that. You'll get your money back.
Okay, what's the
into your wallet.
liquidity been like with the secondary market? Is it moving at all, or is there many loans for sale or many shares for sale up on the exchange?
Yeah, well, the answer is liquidity is always a function of usage, and the more people there are, the better the liquidity there is. So it's definitely improved quite considerably over the past couple of months. So in April, there was, I think, £300,000 worth of buy orders. So that was people in the secondary market buying off other people. And in May, it was slightly less. I think it was 220,000 or something like that. But it's quite high in June. It's already got off to a good start. So the answer is there's definitely, I mean, it would take you time to unwind a large position in a property, but if you've got a few £1,000s in each property, then the liquidity's all right. You can unwind those positions quite easily.
Okay. Thank you for being grilled here. This is what we like. You know the answers. The Q&A was always fun. So Philip Walters, given your dealings with charities, what is the typical lease period, and do the charities dictate the terms of the lease? That's a really good question. So how long are the leases for, and who gets to decide the terms?
So the charity, like NatCro, for example, the lease is always negotiated. So we won't sign up to a lease unless we think it's in the interests of our investors. How much we have the ability to push back depends largely upon how much the charity wants the property in that particular area. So we've been quite fortuitous in a couple of the instances with NatCro because they were under pressure to deliver on a contract with the government and they desperately needed properties in that area. So we were in a position to say, well, we're not going to be able to get the necessary return for our investors that they require, so would you be all right to go and pay a bit more in this instance? And they've been usually quite accommodating in that. So it's definitely a negotiation. It's two-way. The lease terms are usually fairly standardized. So on the NatCro BAS contracts, they're 10 years, and they have break clauses after 2 or 3 years. And then they're rolling after that. And then in the case of United Response, I think it's a 7-year lease, and there is a break clause after the first year or the second year. So it's quite short. But these things, once they're in place and they're working well, these charities want to stay there. And in the case of NatCro, they've got a 95% renewal rate on their leases.
Oh, okay. That's pretty good then. It's a high renewal, 90%.
Yeah.
Yeah,
it's also worth saying that the leases all have CPI clauses in them, so they're linked to inflation. So the rent goes up with the CPI in September each year to the CPI in April. So if the inflation was 2% April 2021, then it would go up by that amount in September 2021.
Yeah, yes, and with all the economic talk of inflation that we possibly might be facing, then that's an important factor that it is going to increase. Have to ask you really quick, Peter, are you a Bitcoin investor?
I am not a Bitcoin investor.
Really?
I know that makes me quite toxic on your show.
Yes. No, absolutely not. I always, I ask everybody that because, some people are not, some people are. So it's always interesting to find out. I didn't think you looked like a Bitcoin investor. Maybe when your hair was longer, I would have said
a bit more,
like more progressive Bitcoin investor than it. Let's get back to the Q&A. What are your typical capital and interest lender returns for the various types of loan after fees? So what kind of return rates can people expect from these deals that you're putting up?
Brilliant question, and I'm sorry that I haven't covered it so far after what 55 minutes of talking. The net yields on the commercial leases that we have on the residential properties vary between 5.5% and just under 7% at the moment. So net yield is net yield. So if you put £100 in at the beginning of the year, you would get £5.50, for example, in 12 equal instalments throughout that year.
Okay.
So that's that. And in terms of the capital growth on the properties, as I said before, they've risen across the board by about 4.5% over the past year or so. Certain properties that we bought at a discount to RICS value have gone up more. So some of the show homes that we bought from Avant have gone up by 10% or so.
Okay. And do you have a little bit more time to hang out to go through these questions? Because we have quite a few.
Absolutely.
So, okay, perfect.
Absolutely.
Thank you for that extra time. So Paul New wants to know, a very important question, have you had any defaults?
So the way the loan contracts are structured is that if someone doesn't pay their rent, then they don't pay their rent. So it's not necessarily technically a default.
Right.
But I think what Paul's after is that have we had any tenants that just haven't paid? The answer is yes. We bought 4 flats in a period property conversion outside Sefton Park in Liverpool in January 2020, and the idea is we bought it off a developer that had gone bankrupt. So the idea was we bought it for 600 grand and we were going to try and sell it for 850 grand, and we are on track to do that. But throughout last year we decided to tenant them, and one of the tenants just decided he didn't want to pay. And we did get the lawyers involved, but there was nothing much we could really do about it. He's since left that property, and we are pursuing him with the county court judgment. But how successful that will be, I don't know. But he owes us several £1,000s.
So is that the only one that's kind of run into difficulties that you've got in the portfolio?
Yeah, that's the only one who's just outright said, I'm not paying the rent. We have had void periods on some of the other ASTs, and we're mindful of that because some of the ASTs now are coming up for renewal in July, August time. But we've been in touch with the tenants, and they've indicated that they want to continue mainly. But that's a decision for investors on the platform, whether to accept that.
Okay. Let's see what else we have. Stuart B has asked, are the Avant Homes facilities likely to be extended where they show more developments are yet to start? Not entirely clear, but I think you know what he's asking.
And then it is a great question, Stuart. Sometimes on these developments, if they haven't sold them within the time frame of the lease, then they sometimes request that they can carry on leasing the property for some time. We will know on the first one, I think in January next year, whether or not Avant want to extend that, and we will ask them. I shouldn't imagine it would be for a period of terribly long. It would be sort of like 3 months to 6 months rather than extending it for another couple of years or so. For the 4 properties that are in Worksop just outside Nottingham, the lease is going until 2025, I think, so it's far too early to say on that front.
Okay.
But potentially you only really know just as the lease is coming up to expiry.
Let's see. Okay, Mike Powell has asked, how often do you get the properties valued or revalued? Valuations on early properties are now 2 years old. Doesn't that mean that the secondary market is operating on old or incorrect information?
Yeah, that is a very good question, Mike. Again, with a view to cost, we have to be, so when we commission a RICS survey, they cost between £300 or £400 per property. So given that we try and operate on as lean a cost base as possible, if we were to do them every year and take the costs on ourselves, then that would make a material impact upon us. So we, if investors wanted a RICS survey done, then it would be up to them to vote for it, and it would come out of the income of that property.
because they're
if
the
that
owners,
makes sense.
so they
Yeah.
have to decide.
So, in answer to I mean, we can put a vote out if you email us at the help desk, and you say that you think there should be a RICS valuation on some of these properties. We can put it to a vote, and then if investors vote to go and commission a RICS survey, we'll get it done.
Okay. See, Paul Goodhind has said, you said your rents are higher than market rents, but how much higher are they? And is the RICS valuation based on the market rent or your own perceived rent? He said inflated rent.
So we commission all our RICS surveys through VASPanel. It's just a broker of surveyors, chartered surveyors. We don't have anything to do with the surveyor. We can send them questions if we disagree with some of the things, and sometimes we've done that, but it always goes through VASPanel. And they put in there what they perceive to be the value of the property based on other sales, comparable sales in the area. They put in there whether they think the lease has got any value, and they also give what they think is the market rent. So to answer your question about how much higher, it depends on the property. So the one that we've done in Bristol recently, there was no premium to local market rent at all, and that's in the survey that's on there. But for the property we have with United Response, we got 3 times market rent. So the market rent, they said in the survey, was £1,000, and we are charging United Response £3,000 for it. So, but that's at the top end of it. I think it's between the two. With NACRO, they have put in some of the surveys that we're paying double market rent, but it depends on a property by property basis.
Yeah, totally understand. So Paul Young said, is it fair to say that I would be looking at a investment with a 10-year timeline with a vague possibility of early exit? How do you decide when a property becomes sold out of the portfolio? Do you do some type of a timeline vote after a few years, or when the lease ends, or do you just plan on holding the properties very, very long term?
So the plan with the charity properties is to try and hold them for a very long time, because when you buy and sell properties, you incur huge costs in the process, and so it doesn't make much sense to be able to sell a property. And the reason people would want to sell a property is for liquidity. So if we've got the exchange share and the exchange is working well, then hopefully people should be able to exit their investments when they want, rather than having to wait until the property's sold and get a return that way. So we have the exchange share on that one, but I don't think it requires a 10-year horizon. But the whole point of Assets Exchange is that we are set up to deliver this long-term inflation-linked passive income to people. So a lot of our users will have the majority of their investments in the stock market because they want capital appreciation, and then they will have a smaller percentage in peer-to-peer or Assets Exchange. And the whole point of that is to try and build up this monthly income so that when they get to retirement, then they can say, well, I'm getting X £1,000 from my investments per month through rental income on Assets Exchange. Okay. So I don't think people want to sell them down. They want this monthly income a lot of the time, and that's what we're trying to deliver for people.
Right. And then somebody had asked if I needed to get my capital back for some reason, how quickly could that be done? I think the answer to that is that you put it on the secondary market, and if there's demand for buying what you're selling, then you could probably exit out over a period of time.
Yeah, I mean, if you had £100,000 in a property, then it would take you some time to unwind it. But if you have £2,000-3,000 per property, then it should be a matter of days or weeks to be able to get your money out of the property.
Okay. Tony Walton has asked roughly how many investors do you have in a property usually? Is there a sort of an average amount of people that come in?
Yes, I've looked at this quite recently, and it was all of the properties were about 300 people had invested. Okay. So there were 300 people who had slices of that property. Obviously, some have £10 in a property, and others have many thousands of pounds in the property. But the number of people in that property seem to be quite consistent at about 300.
Okay. John Day has asked, can you give a little bit of clarity regarding the lender charges? I'm presuming maybe he's talking about their fees on the investor side of things. Do you charge investors anything?
Well, again, I think the property partner got themselves into hot water because they were charging to invest in the market, and then they were charging an assets under management fee. So to be clear, we charge neither. So we make our money on this loan arrangement fee, which is wrapped up into the loan, and that loan arrangement fee is clearly stated in what we call the fixed costs and contingency fees on the platform, and you can see that for each property. And then we keep a proportion of the rent. So you get the net yield. That rental income is provided to you after we've kept some of it for ourselves. We've charged that loan monitoring fee. So there are no direct charges to investors on Assets Exchange.
Okay, that's a good thing. John Day has asked, does the secondary market allow for any discounting if you need to sell quickly?
Yes, it's up to you to go and put the price in that you want to go and sell it at, or buy it at. You don't have to buy at the price that's being offered. You can buy at a much lower price if you want.
Okay. And he also asked, are your property searches geographically constrained by the likely charity partners? I'm presuming when you find that a charity needs a certain property, you're just going to look in that area where they need it, correct?
Yeah, but NACRA is a national charity, so they have requirements in Nottingham, Bristol, Birmingham, Kent. It's quite varied in the places that they want it. And then in the case of United Response, they're mainly the southeast and southwest of England.
Okay.
But we are also looking and speaking to people about properties up in Scotland and all over. We're not bound by any geographic space.
Okay. Peter says, you talk of inflation linked. Would my £100 investments be sellable, for instance, £102 after a year? I mean, you decide what your investment is to be sold at, right? So put it up on the secondary market for whatever you decide you want to sell it. Is that correct?
Yes. Yeah. Yes, you choose the price that you want to sell it at, but your income would go up by 2% in the year, for example. So if you held it, then instead of getting £10 a month, you would get £10 plus 2% a month in a year's time, per se.
Okay.
So that's what the inflation is based on.
Do you have an IFISA available? Can they invest in
Yes,
IFISA?
we do.
Okay.
Yeah, and we Goji operate it on our behalf, just like they do for Assets Capital, and you can transfer money in from other ISA providers, or you can just set one up directly.
That was the easiest question you've had of the night. Okay, let's see here. We'll take a couple more. Roy from Wales wants to know what the minimum investment is.
It's about £1.
Oh.
So you invest in units of £1.
So anybody can get in at that price. I think that's about it. Also, so do you have any incentives for new people signing up right now? Sometimes people offer incentives. Do you have anything like that? And I'm going to put the link to the sign up to if anybody wants to get an account with Assets Exchange. I just put the link in there.
We don't at the moment. We did do when we very, very first started, and it's worth pointing out that people need to credit their wallets on the site using online bank transfers, and that did take a bit of time at the beginning, so we gave people £15, but now it's instantaneous if people put money on there, or it's not instantaneous, it should be done within a relatively short period of time. So we don't provide that £15 at the moment.
Okay, not a problem. See, Stuart B has asked, would you give an indication of the self-build pipeline, please? I think we kind of ran through that already. What you said you have currently. Can you just tell me again what that was?
No, I think Stuart there is referring to, we have one development loan on the site called Row Allen, which is we bought some property, we put them into these self-build units, and we sell the land off, and then these owners go and build their own properties on it using sometimes our sister company Cherish Homes, which uses German manufacturer called Downward to go and put the properties on, but ours is just a straightforward buy some land, sell it off at a premium. So Stuart Law is very much the man in charge of all of that, and he has the pipeline, and he tells me that he's got quite a large pipeline. I know of one directly that he will be talking to Assets Capital investors about, and Assets Exchange investors, which is in the Midlands, but I will leave him to explain all of that on Monday, I believe it is.
Okay.
Yeah.
Tony Walton says, does not the property insurance cover for loss of income, if, for example, after a fire where residents must leave? So is there any type of insurance that would cover for loss of income?
So we have looked at loan default insurance, and it's particularly useful for ASTs. AST properties. There aren't any policies available after COVID because I think they're all feeling a bit sorry for themselves. However, we haven't got any in place for the charity properties. In the event that the property did burn down or the roof fell in, then that would obviously be covered by buildings insurance. But as things stand right now, we don't have any insurance in place to cover for potential loss of income from the charity.
Okay. All right, well, I think that's going to do it for you tonight, Peter. You've been very kind with your time. I don't want to keep you on here forever.
Well, no, thank you very much.
Yeah, is there anything else that you want to tell the Financial Thing listeners out there in YouTube land about what you're doing or what you have upcoming, or here's your time to pitch?
No, I think what we're trying to deliver is this long-term passive income through a property. So you got the security of the property there that we try and buy at an open market value, and then we try and get these fantastic counterparties on the lease that can deliver this long-term inflation-linked income, and that's what we're trying to provide to people. I would also say that Ben and I are very happy to engage with anybody. So if you've got further questions, then please do email us at the help desk at assetsexchange.co.uk, and we can either set up a direct call, we can show you through the site, or if you've got any specific issues that you want answered, then we will try and answer them as best we possibly can, as quickly as we can.
Perfect. Well, there you have it. Thank you very much again, Peter, and I'll likely check in with you in a few months, probably have you back on, see where the company is at, and see how everything else is going for you. And very much appreciate your time. Wish you the best of luck with Assets Exchange and what you're doing, and hopefully some people will check out what you're doing, and you're up to some good things. I like it.
Brilliant. Well, thank you very much, Lawrence, and thank you very much everybody for listening to me. Greatly appreciated.
Well, you know, I mean, it's not hard to listen to you, Peter. You have a lot of good things to say, so we appreciate you. And
you're a charmer.
I do try. Oh, I got to keep you in good graces, so you'll come back when I need you. But thank you again, and we will be in touch. And best of luck.
Okay. Thanks very much. Thanks, Lawrence.
Okay. So there you have it. That's Peter Reed, Assets Exchange. Hope you enjoyed it. I was found, learning about these companies. I don't do this for any payment, by the way. This is all just my own personal curiosity about finding good companies out there to invest in. And Peter, I've enjoyed talking to him. I think he's got some good products and a way to get yield. But we'll do a little Bitcoin, a little crypto coverage. Obviously, stock markets will be doing really, really good this week, and we're up all-time highs. Oil has been raging. I just put up a new Trading 212 portfolio video on the Financial Thing channel to see where the portfolio has been performing, and the oil is really has been doing well. I actually wanted to sell some Barclays shares today, but I completely forgot. I think we're going to transition out of Barclays into some more oil. I think oil is going to continue to do well this year. But let's have a quick look and see where the portfolio is today. We're at £13,994 from the original investment of £5,500, which how can you be disappointed about that? The real big performer here, Laredo Petroleum, We bought in at $27.57 about 20 pounds. We're up to 65 US dollars. So yeah, very, very happy about that. And then Barclays is again has continued to do well, almost doubling, but going to be moving out of Barclays. I think at this point I had about a 50p price target, so probably going to liquidate some of those Barclays shares, and then maybe move into this Tullow Oil, which I wanted to do yesterday, and I completely forgot to do it again today. But Tullow is this little oil exploration company, actually a British company that has done pretty well. We're up about 10% in that, so continue to sort of stick with that game plan within the energy sector. And Ceres, this Ceres Power, which is another UK company, I'm actually going to liquidate that. I liquidated half of that last week at a loss. It's just not really been performing well, and if I think there's better places to get returns, I usually go ahead and exit the position, so that one will probably be gone. But yeah, the portfolio has done really well. We just went a little bit over £14,000 on that, so almost tripling the portfolio again. It's a very unusual time in the stock market right now. I never would have thought that we'd still be on this bull run, especially what's going on in the economy, and it is very surprising it's lasted this long. But as long as these stimuluses continue to be pumped in by the governments and the money printing continues to run, then we could see the stock market continue to do well over the next 6 months. But there's always this chance of a correction coming. When is this all going to come home to roost? What's going on in the economy, we don't know. So let's talk a little bit about cryptocurrency. We've had a good, let's see what's going on in the markets today. We've kind of had a bit of a rebound. If anybody is interested in crypto and what's going on in the market, we've seen Bitcoin bumped from that 30,000 US dollar back to about 38,000 US dollar. Do I think that this run is temporary? I do. I think we're going to see a possible pullback to around 30,000 US dollars with Bitcoin. Still a lot of fear in the markets. I tend to look at the Bitcoin fear and greed indicator, which I think is a great indicator. It's been very historically correct when this extreme fear is in place. We usually, during these bull markets, we see this number sort of go up to in the 70s, 80s, and 90s, but right now we're in 24. I think this is a good indicator of where we're going to see the markets go, and I think we're going to continue to see it just go side to side for now, and with a possible pullback. But I do have some limit orders placed for around 30 and a half thousand US dollars, where I think Bitcoin could possibly go to. But the markets have rebounded a little bit this week. We've seen some 7-day increases here. Cardano up 9%, Binance Coin up 11%. Still way down from where we were very recently, but I continue to look for those opportunities, and I think if we have another pullback, which is possible, it'd be a really good place to buy into. But there's a lot of noise out there, and I posted this on the Facebook group. If you're not in the Facebook group, come join us. But this news story that was put out a couple of days ago about JP Morgan saying big investors are not buying the Bitcoin dip, prices could fall further, and this news piece has been all over the internet. And one has to question, why would JP Morgan put out a news story like this? For what purpose does this occur? It just doesn't make any sense, especially when you consider that there's news stories about JP Morgan to launch cryptocurrency managed funds here. This was just in April, so are they flip-flopping about what they want, or are they manipulating the news to manipulate the prices? I mean, it's a pretty big company. They can have some effect on the prices. And they are going to be offering a managed Bitcoin fund targeted at private wealth clients, which I've heard it will be launched this summer. So why are they putting out news stories like this? What I think is they want to make the price depressed so they can go in and buy, and then offer this Bitcoin to their high net worth clients when this managed fund is introduced. So you have to be very, very careful about what you read in the media and how much of it is true. What are the reasons these companies are putting out these news stories? Like, why? How does this really benefit anybody from this news story? JP Morgan's been slapped on the hand for manipulating precious metals, and before they've had hundreds of millions of dollars in fines for doing that, and this is no different. I think this is pure manipulation on their part to try to get the prices to be depressed for buying opportunities. I still consider to go by the narrative that Bitcoin will be six figures by the end of 2021. We have to shake out all of the fear that's going on right now through these news stories that are happening, such as this one, Bitcoin is a fast, by a Monday CEO who knows, what he knows about it, probably not very much. A lot of people still consider these old timers who are saying this narrative about Bitcoin as a fast, because they really don't understand what it is and why it's there. But I mean, it's always been the same for me. Stick to the game plan. If you really believe in Bitcoin, you believe it's a product that can really be a store of value for the future to protect against inflation. I think we're going to see some very, very severe inflation coming over the next 6 months to a year. And if the governments do decide to turn off the money printing taps, then that's when you're going to see the poo really hit the fan. And that's when you see assets like Bitcoin and possibly gold really protect capital and hopefully increase in value. And as Bitcoin's scarcity continues to drop and there's less available on the markets for sale, that's when that price explosion will occur. So there you go. That's my take on it, and I think we'll see some really interesting things happen in the crypto market in the next month to 2 months. Peter, a couple of questions. You say you have some limit orders in for Bitcoin. Does that mean you must have funds in Coinbase account not earning anything? Yes, that's exactly right. You have to have funds inside a platform to set limit orders, but I don't mind that because they're not earning anything, but what they would be earning would be very probably nominal at the moment. If I had it in a savings account sitting there, there's no interest. And if it's money that I want to use for a certain investment, I don't want it tied up in anything that could potentially lose value, like an index tracker, or if I put it in peer-to-peer, how liquid is it going to be? It's not always guaranteed. So I want it there to deploy. And the thing about cryptocurrency too, the markets move so fast. If it could drop from 38 to 30,000 in a day, so I want that money in there ready to be triggered at a buying point. What else? Robert Pace says, I'm an old timer, but I got Bitcoin. I'm an old timer too, Robert. Yeah, when I say old timer, I think about sort of these old school investing types like Warren Buffett and people that are just not believers in it yet because they don't really understand it. So just that very old school mentality of investing. You must invest in stocks and shares. You must invest in certain ways. It's been a narrative that's been around for a long time. Paul said, check out Easy Money and let me know what you think. Yeah, I tried to get in to have a meeting with them about 18 months ago or 2 years ago, and they were not very open to that at the time. So they've never really been on top of my list of what I want to invest in. Mike Powell says, I've been in Assets Exchange from the very start, and it's been very good so far. I can vouch that Peter and Ben are very responsive. That's a good review for Assets Exchange. Thanks for that, Mike. And then we have also who else? Somebody else. Chris Hay has been with Assets Exchange for 3 months, returning 6.8% income plus good capital growth. Peter's been great when I've needed to speak to him too. Yeah, I honestly I get the warm and fuzzies from Peter, and usually that's important to me. Sometimes I get it wrong with people that run these companies, but I've had really good conversations with him, and that's a good thing. Let's see what else. We're probably going to get out of here. Oh, just a couple of announcements. We're going to have Mike Briscoe from Crowd Property on July 1st. That will be our next guest, with some other people hopefully in the pipeline if I can bribe them to come on here and do this. But yeah, hopefully you enjoyed the stream. I know we've been running a long time, but please, if you can hit that thumbs up and subscribe to the channel. We're over 400 subscribers. As you know, the channel got shut down. I had to rebuild from scratch, which has been painstaking, and sometimes it had me crying in my Tetley's tea. But thanks to every single person who has supported the channel and hit that subscribe button. I appreciate that. And also, I've set up a Patreon if you want to support the channel. If you go to the YouTube channel, you can see a little link up in the top graphic if you want to become a Patreon supporter, because obviously this is not something I earn money off, and anything support wise that you want to do, totally not expected, but certainly appreciate it. It helps pay for the dog food. So we'll be back next Thursday. Thank you again. I really do appreciate everybody for being here and spending the time and supporting Financial Thing, and I really enjoy doing this. I do it for the love. I do not do it for the money. And it's been a great stream with Peter. We'll see you next week back here at Thursday, 7:30 p.m. UK time and 2:30 p.m. US Eastern time. And that's all I got right now. So we'll see you next Thursday. Take care, everybody. Bye.